At the exact moment Facebook was supposed to become a public company, Nasdaq froze. Not the stock, the exchange. And for millions of dollars already in motion, there was one terrifying problem. Nobody could confirm who owned what. Traders weren't watching prices. They were waiting for answers that never came. Because once the market opens without confirmation, every decision that follows is a guess. May 18th, 2012, Facebook's IPO, one of the most anticipated market debuts in modern history. The offer price was set at $38 per share. Trading was scheduled to begin at 11 a.m. Eastern. It didn't. Instead, the opening trade didn't hit the market until 11:30, printing around $42. 30 minutes doesn't sound catastrophic, but on Wall Street, 30 minutes without clarity is an eternity. Nasdaq's job that morning was simple in theory. Take an avalanche of buy and sell orders, match them, and produce a single opening price. That opening match has a name, Lois, the cross. It's designed to concentrate liquidity and ensure that the IPO opens cleanly and fairly. But Nasdaq's system had a problem, one that mattered precisely on a day like this. According to regulators, the software handling the IPO process had a design limitation. As orders and cancellations surged, the system struggled to keep up. Traders began seeing irregular behavior, orders that didn't confirm, cancellations that didn't process, messages that didn't behave like a normal market open. But then Nasdaq made a critical decision. Instead of stopping, leadership pushed forward. Executives initiated what regulators later described as a Code Blue call, an internal crisis meeting. The goal was speed, fix the bottleneck, get the IPO live, restore confidence. Nasdaq engineers believed they had solved the issue by removing a small piece of code. Just a few lines. And based on that belief, Nasdaq allowed trading to begin. What they didn't know was that the real problem hadn't been identified. And once trading started, there was no rewind button. Here's the nightmare scenario for any trader. You place an order, and you don't know if it executed. You don't know if it was canceled. You don't know if it's still active. That's exactly what thousands of investors experienced. According to regulators, more than 30,000 Facebook orders became trapped inside Nasdaq's systems. Some remained unresolved for over 2 hours. That's not a glitch. That's a breakdown of the most basic promise a market makes: knowing what you own. The system also violated another foundational principle: price-time priority. Earlier orders at a given price are supposed to be executed before later ones. But Nasdaq's opening mechanism, the cross, was now out of sync with reality. It was calculating prices based on an outdated snapshot of orders. Meanwhile, the real market had already moved on. When continuous trading began, the system and the market were no longer aligned. Orders that should have been handled at the open spilled into live trading. Late, out of order, and all at once. From the outside, the market looked volatile. From the inside, it felt blind. If you're a broker and you can't confirm what you own, you hedge. You buy to cover potential short exposure. You sell to reduce risk. Multiply that behavior across thousands of firms, and chaos becomes rational. Nasdaq later acknowledged that the disruptions didn't stop with Facebook. The malfunction spilled into other symbols as well. The problem wasn't just technical anymore, it was systemic. By the end of the day, Facebook technically survived its IPO, but Nasdaq didn't escape unscathed. Regulators treated the incident not as an accident, but as a failure of controls and decision-making. The SEC concluded that Nasdaq violated market rules during the IPO. In 2013, Nasdaq agreed to pay a $10 million penalty. At the time, it was the largest fine ever imposed on a stock exchange. But the damage didn't stop there. Nasdaq also faced pressure to compensate affected market participants. Initially, the exchange set aside $40 million to reimburse firms harmed by the IPO chaos. Later, a compensation plan totaling up to $62 million was approved. The message was clear. This wasn't a victimless failure. There was another detail buried in the aftermath, one that revealed just how deep the breakdown went. During the disruption, Nasdaq took on an unauthorized position in Facebook stock through an internal error account, more than 3 million shares short. The exchange, meant to be neutral infrastructure, had exposure it wasn't supposed to have. It later covered the position at a profit, but regulators said that too violated Nasdaq's own rules. The irony is hard to miss. On the day Facebook went public, the exchange itself lost control of the market it was supposed to manage. So what actually caused the disaster? Not hype, not volume, and not a single line of bad code. The failure was a decision: launching trading before fully understanding the system, choosing speed over certainty, turning a technical delay into a trust crisis. And in markets, trust is the product. 3 lessons stand out. First, uncertainty is more dangerous than delay. A late open is survivable. Not knowing what you own is not. Second, fixing symptoms is not fixing systems. Removing code without understanding behavior is a gamble, not a solution. And third, market infrastructure must default to safety. If an exchange can't guarantee order priority and confirmation, the correct move is to stop, not sprint. Nasdaq didn't just mishandle an IPO, it exposed how fragile modern markets become when the world's fastest machines collide with incomplete understanding. On Facebook's biggest day, the most important thing that went public wasn't a stock. It was Wall Street's dependence on systems that break faster than humans can react. What makes this case uncomfortable isn't that the system failed, it's that everyone did what they thought was reasonable, right up until the moment it wasn't. This wasn't a story about Facebook. It was a reminder that modern markets don't collapse loudly. They fail quietly, inside the systems we trust the most. This was one case file. More are waiting.